At the end of the week, Wall Street is digesting the crucial data on the US labor market. Risky assets are trading under high volatility and mounting pessimism. After the stunning rally earlier in the week, Wall Street is closing in the red. Hawkish remarks of Fed policymakers and expectations of upbeat data on the US labor market aroused pessimism among stock investors. The benchmark stock indexes closed a highly volatile session on Thursday with losses. The Dow Jones shed 1.15%, the Nasdaq slipped 0.68%, the S&P lost 38 points intraday, or 1.02% to close at 3,744. The key indexes trade mixed in the New York pre-market. After the publication of the NONFARM payrolls, Wall Street gave up any hope, with its major indexes going down. The S&P is expected to trade in the intraday corridor between 3,590 and 3,710 points. Despite a faint hope for a cooling down in the labor market, the stock market was hit by another sell-off on Thursday. As a result, 10 out of 11 main sectors included in the S&P 500 fell. The real estate sector incurred the steepest loss of 3.3%. The only sector to show strong performance was the energy sector, which gained 1.8%. Wall Street traded quietly in the pre-market. The red-hot government data on the labor market wrecked any hope for further growth of stocks. The US public and private sectors added 263,000 jobs in September, the lowest score since April 2021, but higher than the consensus for 250,000 new jobs. The employment data for September declined compared to the average reading of 439,000 in the first 8 months of the year. Indeed, tight financial conditions and soaring inflation are already putting a strain on the economy. Nevertheless, the fresh data still indicates some tensions in the labor market. The employment growth is higher than the average reading of 2010 at 167,000. It's 500,000 more than the pre-pandemic levels. Tight hiring conditions are confirmed by the unemployment rate. The jobless rate dipped to 3.5% in September. That matches the score for July, the lowest level in 29 months. The unemployment rate is below the consensus of 3.7%. The number of jobless Americans decreased by 261,000 to 5.75 million, and the number of the employed grew by 204,000 to 158.9 million. The participation rate inched down to 62.3% from 62.4%. The average hourly earnings fell to 5% last month from 5.2% in August, lower than the expected downtick to 5.1%. The dynamic in wages is closely watched by investors, so lower wages might bring some relief. By and large, most of the ingredients in the NONFARM payrolls prove the resilience of the US economy and give the US Fed leverage to go ahead with aggressive rate hikes. Stocks of the companies with a mega capitalization traded with sharp losses in the pre-market. The high-tech sector is trading under strong pressure today. The reason is the warning from AMD about dwindling revenue, which raises concerns about potential losses of the chips manufacturer. AMD plunged to 5.4% in the pre-market because its estimated revenue in the third quarter was roughly $1 billion lower than in the previous forecasts. Other chips manufacturers such as Qualcomm, Semiconductors, Lam Research and NVIDIA followed suit. and also incurred losses in the pre-market. Having recovered previous losses, the US dollar index went upwards, enjoying support from the Hawkish Fed and in the light of the fresh non-farm payrolls. The index rebounded more than 2% from the two-week lows. It was trading at 112.50 at the time of recording this video, and the non-farm payrolls cemented the bullish outlook for the US dollar. The intraday CAD for its index is seen between 111.90 and 113.20. Despite an increase in unemployment claims, the US labor market proves its health. The non-farm payrolls will be the key factor for the US Fed to make the next policy decision. The chance for a softer stance is almost zero. All Fed's policymakers who spoke this week confirmed the central bank's commitment to its fight against inflation as the cost of economic troubles. Charles Evans unveiled the Fed's agenda on Thursday, saying that he expects interest rates to be 125 basis points higher at the year-end because of a disappointing inflation dynamic. Besides, Lisa Cook and Neil Kashkari were on the same page, saying that the struggle is going on and that the Fed is not ready to revise its rhetoric. Loretta Mester was extremely resolute, saying that the Fed should be focused entirely on inflation, even at the cost of growing unemployment rates and weaker economic growth. At the present, markets foresee an 85.5% chance of a rate hike by 75 basis points in November. There is a slim chance of a 14.5% of a rate hike by half a percentage point. In this context, the US dollar enjoys bright medium-term prospects. Amid the Fed's hawkish moves, the US dollar index grew 16.7% in September from a year ago. The outlook for October is clearly bullish. The labor market impacts on the USD CAD pair. The currency pair went down amid the loonie's strength. It's trading at about 1.3695 at the time of recording this video, and the intraday CAD is defined between 1.3640 and 1.3720. The loonie owes its strength to the fresh employment report from Canada. The Canadian economy created 21,100 jobs in September, slightly higher than the expected growth of 20,000. It's the first growth in employment since May. The unemployment rate declined to 5.25 in September from 5.4% in August, whereas analysts had projected a flat reading. The employment growth cemented expectations that the Bank of Canada would stand pat on its hawkish policy. The central bank has already raised interest rates 5 times this year, so the overnight target rate stands at the highest level since 2008, with the prospects of a further monetary tightening on the back of a soaring inflation. Governor Tiff Macklem stated that the central bank had not spotted yet a clear-cut evidence of a waning headline inflation, and this confirms the hawkish rhetoric. The firm US dollar logically dampened the risk-on mood, thus affecting the crypto market. Popular digital assets went down in sync. Bitcoin has shed 2.2% to trade at 19,500. Altcoins are trading lower as well. Ethereum has lost 2.4% today. Solana, Ripple and Litecoin are also trading in the red. Bearing in mind the fundamentals and the correlation to the high-tech sector, Bitcoin is likely to move deeper into negative territory. Its intraday CAD is seen between $18,600 and $20,000. And we wish you to finish this trading week with the gains. Trade in confidence with the InstaForex, and see you soon.